Hey traders, happy Monday. Welcome to the weekly outlook. This is Chris Pulver here talking about all things stocks, forex, cryptos. This is the week of August 17th through the 21st. Some interesting discussions from last week. All markets finished positive. We had the Dow Jones up just shy of 2%, S&P shy of 1%, NASDAQ flat. Bitcoin still hanging strong, nearly at $12,000. We'll see what happens with that breakout. And the 10-year note up from about half of 1% to around 0.7%. Big news, I'm not sure if anyone's been taking a look at this, but Epic Games is putting on a big fight against Google and Apple. I did not realize that the Apple and Google take was 30% in in-app purchases. So if anyone's heard of the game Fortnite, kind of the epic 3-year sensation, a free game that makes billions of dollars every month with essentially just purchasing tokens. If you don't play the game personally, I'm sure someone very close to you does, to the point of you may know people that are very obsessed with the game. It has been a game changer for sure, and now they're taking on Apple and Google and just trying to make some more money. So if they do win, that could be a huge win for all apps out there to get some of their dollars back, as opposed to Apple and Google taking a big, significant cut. What else do we have going on this week? We have the Democratic National Convention starting. We have some earnings this week with Walmart, Home Depot, Target. We have Alibaba, Estee Lauder, Foot Locker, and John Deere, some notable ones. I'm also looking at the volatility gauge quite closely, the VIX, the VIXI, as we head into a school year. Some kids have already started to go back to school. I know that some colleges are doing a hybrid program where they might be coming on campus for a brief amount, maybe starting into September, going through Thanksgiving, and then not coming back for a couple of months. Sports have been canceled since last week. We saw major conferences for the NC2A, the Big Ten and the Pac-12 canceled, and everything else is still in limbo between like the SEC, the ACC. There's still a lot of debate of whether or not we're going to have college football on Saturdays, or if the NFL is going to begin and play. Will the NFLs be a both Saturday and Sunday schedule? We don't know. Unemployment benefits have run out. I'm looking to play volatility. That's probably the safest instrument for me to look at making some decent profits over the next 3 to 6 months. And I'm looking to see when the Forex market is going to start getting out of this post-summer drift, establish some transitions, some tops and bottoms, and see an increase in day-to-day volatility. It's not there yet, but we're going to take a look at everything today. So let's dive right into the charts. Let's take a look at some stocks, some indices, some Forex, some cryptos. Before you begin, understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. If you're following me out there on social media, I'm posting this video, my weekly outlook, as well as some of my Keep It Seriously Simple video series, which looks something like this. You can find those on YouTube on my YouTube channel. I'm posting this weekly outlook on my YouTube channel as well as on IGTV. So on Instagram, you can follow me at pulver.chris, Twitter and Facebook at pulverchris, or just type in my name on Facebook and YouTube. All right, so let's go into the charts here. Take a look. I'd like to begin with the dollar index. So let's start here with the dollar index. Calendar-wise, this week is actually very light. This is high and medium impact. I had to bring in medium impact or else it looks like there's essentially nothing on the calendar this week. So we do have OPEC meetings all day Wednesday. We have FOMC meeting minutes. We have some Aussie news early. This is actually 9:30 p.m. Eastern time on Monday, so that will be Tuesday's trading day. But the RBA dropping some statements there. Eurozone PMI coming out on Friday. That's coming out of France and Germany and the Eurozone. That's Purchasing Managers Index, I believe. Let me double check that. Purchasing Managers Index, yes, PMI. So coming out Friday, but really a fairly light calendar. Don't be surprised if we see some spike highs, some spike lows. Again, this month or this week will take us until the 21st. If we just take a look at the calendar, trading until the 21st. Next week, we have another full week of trading, 24th through the 28th, and then officially the 31st will be a Monday. We'll get out of August and kick start September. If you're looking for movement, if you're wondering why the markets don't seem to be moving a lot, you're wondering where the volatility is, just wait. All right, I really think that if you are wondering, waiting, hoping that the markets change from this low volatility and this, why isn't the stock market falling? Why isn't the stock market doing much of anything other than just drifting higher? Why isn't the Forex market moving too much? Look, we're seeing a steady run in cryptos. If Bitcoin, Ethereum, and other majors run higher, that's great. Forex, we have some long-standing trends that have been really from bottoms in March I should say tops and bottoms in March and April. We have been in the same direction from those tops and bottoms in March and April all the way to now. So we've had some corrective moves, but for the most part, the Aussie's been overextended. The dollar's been beat up pretty badly through the last few weeks of July into August. So I'm, again, watching to see, are we going to transition out of some tops, bottoms, some extremes? September, October is a balancing month, or we're going to have risk on, risk off trading. That's been a really major tone throughout the entire year. So again, that's why the start of today, if I go back to this little, I didn't even talk about this. Why did I pick this screenshot? Patience. Okay, look, if we have our rod out there in the water, we're not just throwing, and let's see what we catch. It's like, let's just wait. Look, I know that volatility will change. I know that volatility should improve significantly. That should be something that just kind of changes the overall landscape of what we're looking at. We should see stocks on the move again. We should see Forex pairs, moving all over the place. So one thing that's very difficult for traders, that's exercising patience. So do I think I can wait 1 to 2 weeks to allow the moves to happen, allow some breakouts to be very obvious, to allow some directions to take foot and break some highs and lows? Yes, I can wait. Okay, I'm going to take a vacation this week. I'm going to go from Thursday through Sunday, take a long weekend, get out of here. Okay, get out of the office for a little bit. Understand that things, my chart alarms are set. Maybe I get some alerts on my phone. I'll take a look and I'll trade on my phone. It's going to be okay. I'm trading small. I'm trading where I need to trade. I've got cash and margin at the ready. And if I'm a little bit late, okay, fine. I can get in and still participate, but I would rather do that than trying to force trades right now when things can move any direction. So I do think we're going to have some explosive volatility ahead, so just be patient. I think lurking under the surface here is a monster that we can catch. Right? I think there's going to be some huge opportunities over the next 4 months, 5 months. And in order to get them, we just have to be patient, see things clearly, and take good trades. Okay. All right. So let's get into the charts. Take a look at the dollar index first, right here. So dollar index, we've talked about this potentially coming back down into previous lows. Now we have an intermediate low around 2018. We have some inefficiencies around 2018. Now again, how does this translate? We saw the dollar index moving up very firmly from a consolidation breakout. We had lows in 2018, lows all the way back into 2015. Consolidation. What do? Well, we established a lot of ranges here. The euro dollar was also sitting around a 125. That consolidation area broke to the south on the euro dollar and broke to the north on the dollar index. So here we are several years later, so 2018 lows to 2020 highs, and this dollar has been weakening. So July started to accelerate that move to the downside, which is okay. I am not looking to buy heavily on the dollar until we break this trend line right here. If this trend line breaks, I'm going to start looking for some lows to buy from. So we get on the right-hand side of this trend line. Dollar index looks like we'll establish some bottoming patterns. If we go a little bit lower with the dollar index and price, we would see some disagreement with our momentum indicator. We are registering oversold conditions, so that is a bit early, right? It's anticipating where the lows are going to form. But I would look for the dollar to form some lows early on, maybe some V bottoms, then some reversal patterns. We look on the right-hand side of the trend line, and then we see the dollar recover. So if we're looking for bottoms on dollar index, that means I am looking for tops on euro dollar. That means I'm looking for bottoms on dollar Swiss. I will watch other dollar pairs as well. I do think that the Aussie dollar is still due for a correction to the downside. My bar count that I have on the Aussie dollar is also very, very high. In fact, we are sitting at Aussie dollar 4-hour bar count is 502 bars. So quite high, where I'm expecting it to be at least a little bit of a rebalancing, and we have some targets below. We have some pockets and inefficiencies. We have reasons from the technical standpoint. We have reasons for the Aussie dollar to drop. We have technical reasons for the dollar index to find some lows and start to break. But again, I know that patience is the key here, right? We might see that this will go lower. If it breaks the lows, that's fine. Doesn't mean I just jump in and buy it, but it means I'm looking for disagreement, oversold conditions. And once we get more on the right side of the trend line, that will be permission and confirmation for me to start looking to buy a little bit more aggressively. So we'll take a look at the SPY really quickly. Keep in mind that August is, an important summer month. We break out of it. We typically see some either continuation, some breakouts, some transitional tops and bottoms. Q3 is still going to run into September. right? October, November, December, that's going to be Q4. So we might have the path of least resistance right now is to maintain this push, to maintain this bullishness, to have a great Q3, get back to those February highs in the SPY, get back to those February highs in the Dow. The NASDAQ's on its own planet, 15 to 16% higher than the February highs after a 60+% rally from the March lows. But if we drift up to these highs and take them out, you can see that we're right there. Now, I think this is still a bull trap. I think this is a sucker's play to get long at these highs, but I'm not ready to fight it. I wouldn't be fighting or selling the SPY until this breaks. If you are anticipating this thing to top out, I hope it works, but I just don't feel like the financial engineering right now is going to be in the favor of this market really imploding unless there is another, perfect storm of things to drop it. Yes, it seems like there should be, right? We have coronavirus lurking in the background, kids going back to school, college sports getting canceled, unemployment benefits not getting extended with Congress at stalemate, executive orders that are unconstitutional, an election that's coming up that is divisive. There's a lot of things that make it seem like there's no friggin' way that this can go higher. But it is, and it can, and I don't know how to time this, right? Now, if you're trying to just play it, okay, you can look at inverse ETFs and you can hold those positions. You could buy inverse ETFs at lows and all this disagreement, and when we eventually drop on the markets here, then yes, you'll get paid on that. But that might take 3 months. That might take 6 months. That might take 12 months. I don't know. So rather than fighting this, I'm looking to trade the volatility index. So I'm going to look to play something like the VIXY, and we got pressed down towards 20 bucks last week. We have lows around $11. So I'm essentially looking at building some positions from 50, if we get 20 bucks, that's kind of where I'd start testing, which is right about now. But I'm going to look to space out some of my orders from current levels, 20 bucks down to these lows around $11. So I did put in a limit buy last week around $14. I'm going to change this to 15, and I'm also going to add another position around $11.50. Okay, so I'll talk more about this with my trading room this week, but I'm going to look at a limit buy at 15 and 11.50. I'm tempted just to put in a teaser or a tester trade right here around 20 bucks. I do think that 20 bucks will get filled. I know that if it gets filled at 20 bucks, it can seriously fall all the way back down to this gap around $12.50 to $13. So this would not be a trade at $20 with a stop. This would be a small trade at $20 and then another trade at 15, another trade at 11.50, and I would sit and hold, build a base position, hopefully around $15 or lower, and see if we can get anywhere back to these highs we had back in April, which were 60 plus. So if I can build a position around 15 bucks, and we can get up towards $60 to $70, that's 400 to 500% profit I can take. Even if we come back to something halfway, if we get down to these levels here, go all the way back up to these highs as opposed to these highs, that's fine. It's still big gains on the horizon if we have some decent volatility. I do think that's coming. So could this market get suppressed and have volatility pushed lower and lower? Sure. It's what we've been watching since April. As soon as we had our spike in March coming down, Fed, central banks step into the rescue, stimulus packages, keep it going, keep it going, keep it going. Don't fight it, don't fight it. It can get suppressed all the way back down to these lows. But we have major option expirations in November. After the election, we have major option expirations in December. Those tend to be high volatility windows for instruments like this to spike up, and we will see if it allows us to get paid on it. So VIXY is one way to trade it. VXX is another one you can play some options on. That looks a lot like the VIX, which is a volatility play. So rather than trying to short the SPY or short the NASDAQ or short the Dow, I'm just going to trade volatility. I shorted all the major instruments, the indices earlier this year in January, paid out really nicely, played a lot of volatility as well. This second go around with everything that's happening from the stimulus packages and how volatility is again kind of being artificially manhandled and suppressed, I think that volatility is something I'm just going to play and hold, expecting it to have some type of personality here from the lows around $12. And if we spike up to 30, 40, 50 bucks, it won't take very long to do it. Maybe we have something unleashed during the election for a couple of weeks, hold on to it, make some good gains, and take some profit, and have that be a nice little Christmas bonus. So food for thought. Let's go ahead and talk about some currency pairs as well. All right, so let's start here at the beginning. Aussie CAD, alphabetical order for Forex. Aussie CAD did a pretty nice job breaking the trend line last week. I did take some short-term profits. We're back into my little stack of sell stop orders. I am still focused on selling this Aussie CAD, and the level is anything below this previous low right here, which is around 92.50. So, we have a monthly target at 93.26. I definitely think that's going to get hit. I certainly hope that it will be. I'm looking left on the chart. There's a nice little pocket at that candle. We have previous lows that price has been at. Even if the bears can just come down and score a point right there around 92.50, anything inside this green box for me as a corrective move is a profitable spot for the Aussie CAD. So I am focused on selling the Aussie CAD. I have some positions that I've leveled myself into, some small positions up here, taking some partial profit. If we come back and retest the highs, I'll still sell. If we come back and retest the backside of this blue trend line, I will still sell. Right? I'm looking for price to get into this green box, protect all of my sell trades, and from there, interested in looking to see what happens next. Do we end up bouncing off of that level where this is a big swing, corrective move into this area, and then we have another push coming to the upside? Very possible. But for right now, my focus is I'm selling here, looking for this area in the green box to take some profit, and that is that. So that's my Aussie CAD for this week. Just continuing to focus on the area and work the position. Aussie Swiss is still sideways. Not much to do and not much offered on that one. It will be breaking out here in the next couple of weeks. We will watch it carefully. Aussie Yen. If and when this trend line breaks, this is what I'm watching really closely. If we break this trend line, looking for this to head lower. Lots of resistance here around 7,700. If we break and go higher, that's fine, but I do think there is a potential bull trap at those highs. Now, does that mean that I can't buy it? Not at all. If you're looking to buy this breakout, stop area tight below these candles and see how high it wants to go. We can quickly move stops to break even or better and take whatever breakout the market gives us. However, if this resistance holds and it turns into a confirmed bearish break of the trend line, I am definitely looking to sell that aggressively back down towards 72. That's a lot of opportunity. If we have highs around 77 with confirmation to take us back to 72, that's a lot of room for us to make some profit. Aussie New Zealand, interesting development on this pair. I did talk about this last week in my trading room. Right above the 108.75 level was a stop out area. If you are holding on to trades, look, here's what I'm watching for. We do have some overbought conditions, which this currency pair does not register very often. We have a gap higher this week. We have some pockets as well, as this is running higher with multiple daily candles in a row. Again, I keep saying this. August is a transition month. This could be running up into the 18127 zone right here, which happens to coincide with a nice connected channel high. Take a look at this. You can see resistance, resistance, resistance. If we're running right up into this channel right in here, we could have some resistance and this ends up falling back down into channel support or potentially all the way back down in here. Now, right now the RBNZ is making it a point to be weaker. However, that doesn't mean that we can't have a technical balance on this currency pair. I would say if this runs as inefficiently as it has been doing, where the bulls are in full control, I would say the highest point we're going to get to is around 13 to 1400 before this thing ultimately creates a top and starts to fall back down. Now, I hope that's not the case. Here's why. I want to look for confirmation to start shorting the Aussie New Zealand around this 110 to 111 area. It's currently just above 110 right now. So if we end up establishing some really nice highs at 110, 111, and we break that trend line, I would short this back down to previous lows around 106. I would love to build a position here between 106 and 103 to take this all the way back up to 114. So it's a big trade opportunity. If it cooperates, we made a lot of money over the last several years on this pair with lots of great trades. It is such a technically obedient pair. That's what I love about it. That's why I continue to trade it with all these big positions. Now, it has to cooperate, right? So if we have some nice resistance here, I'm looking for a trend line break to confirm, take it back down to previous lows. Then I'm starting to look to build some small buy positions all the way back up to a 114 run. Now, if I'm wrong and this doesn't stop, if it runs to 110, 111, 112, 113, 114, well, then I missed my run to 114, and I would be looking for highs to form and this pair to balance a little bit. Now, we might come right back into here, 108. We'll go from 114 to 108, maybe. We will keep a close eye on this one, but this has been a shallow pullback. We have not had much of a technical correction here, so I'm watching it very carefully. If we see 110, 111 hold, I do expect this to fall back down and be obedient and match once again. So that could be an interesting pair that we follow this week. Aussie dollar has an awesome bar count. It's over 500 bars now on the 4-hour chart. Watch this trend line carefully. Once we break this blue trend line again, we might keep drifting up to this 73 to 7400 zone. That's fine. I'm looking for lots of resistance, selling it back down to a target level. Okay, around 68.75 is a monthly target from July. Coming back to these previous lows, 67.75. I'm short on the Aussie dollar for that reason. I'm shorting it small here on the left side of the trend line. It's a little bit early. I'm leveling into it. Okay, this is part of my adding to winning trade strategy, so I'm taking some small trades right now. Once I have a little bit more confirmation, I'll add to my winning position. So if you want to watch that video, make sure you check that out in my Keep It Seriously Simple video series. But this is Aussie dollar. I'm currently short, going after 68.75 or lower. CAD Swiss, we're going to hold off on that one. CAD Yen had a nice breakout to the upside. I'm looking to see, does this just simply retest? Is this a break to the upside, retest, and we go higher? Are we going to come back to this high? Are we coming back to this pocket? Are we going back to this previous high around 84.50? If this is going to hold the structure, we have to break, retest, and go higher. If we come back inside and close below this yellow box, this is going to be another nasty little fake out to the upside, and we're probably coming back down into range lows. We might even offset this entire move. So it could be a tricky trade. However, I hope it's pretty straightforward. We go up, we pull back, we go up again, we go back. If we pull back to past resistance becoming support, then this has one more leg to the upside here. If it continues to drift, we have a nice pocket and resistance even higher. So I'm giving this a chance to run. I am currently long on this CAD Yen to the upside with a stop area below this recent low. And I'm looking to see, can we get back to this previous high and to this pocket? So it is a nice little surplus I'm going for on the upside. Let's see here. Swiss yen. I did get out of this trade last week. I was in from the breakout at 114, took it up to around 117.15, which isn't a bad trade. I was looking to take profit around 118. I turned off my robot early, grabbed about 250 pips of profit overall. Pretty happy with that, and now I'm just waiting to see if we can hit 118. I want to start selling it off of 118 with some trendline confirmation. Euro Aussie, no trade on this one. It's still range bound. If anyone's interested, it's still range bound for right now. 6,500 resistance and 6,100 support. That's the game. Euro CAD, I'm holding a couple of small sell trades. I'm looking to get back to 5,400. Euro Swiss, I just have it surrounded. Okay, this pair is super slow. It's super messy. It's super annoying. However, I still think this is going to be a big payout towards 110. Now, whether or not we have to come back down one more time, I don't know. This might come down one more time to the low, and then a rally to 110. This might be nothing more than consolidation. We have a false breakout to the downside, run back up to 108.30 and higher, and then we make that run to 110. So I'm still bullish on this one. My long-term view is that we'll hit 110 or 110.50, and I'll remain bullish on the Euro Swiss for that reason. Euro Pound. Pretty interested in this one as well. You can see what I'm talking about with these transitions, right? August, looking for tops and bottoms, looking for breakouts. What happens when this Euro Pound breaks above this box? What happens when it breaks below this box? It's going to go somewhere. Okay, so I'm watching. If nothing happens, I'm not really that interested in trading Euro Pound at any of these levels currently. But if we break above, aggressive trend, look for the breakout, target the high. If we break below, aggressive trend, look for the breakout, target the low, target the low. In fact, if we do break to the downside, I like the Euro Pound better to the downside with more room to work with and better probability targets. If we do break to the upside, I would be more aggressive at eliminating risk and then looking for a big opportunity to short this all the way back down. So if we do have a chance to play this super high, I would sell this at 9,400 to 9,450 and trade this all the way back down towards 87 and 84. But that trade's going to take some time to set up, so we'll continue to monitor the yellow box for right now. Euro Yen, looking for some resistance up in here. We are getting a slight trendline break. I'm just going to hold off on this one a little bit. Not going to rush in any yen pairs at this time. I'll just wait. I'll wait and see, do we have a price pattern to trade? I'm interested to see, do we come back down and take out this low, set up a price pattern, set up here. On the right side of this trend line, I'd say that's where we have permission to sell this Euro Yen like crazy. We'll see what price does, right? If it just goes sideways and nothing really happens where it's dancing around between this area, we go back down, we go back up, we go back down, then we'll just look at this as a consolidation level. If we break down and we stay down, awesome trade. If we break up and stay up, fine. That's a good trade too on a breakout. But I want to see what price pattern develops on Euro Yen before I do anything with that. Euro New Zealand, we've had a great run in Euro New Zealand. We have been long since the breakout here around 7,400. Excellent trade up towards 78.50 where we measured this, and it continued to break even higher. I know traders continued to trade this breakout around 7,900 through the 8,000 handle and protecting profits. Now, at this stage, previous resistance is probably going to provide some future resistance. We might sell back off a little bit. This is what I think on Euro New Zealand. If we come back down into this area again, I think this is another buy trade. I think we have this, this nice double bottom formation, inverse head and shoulders here. As we head to the upside, I think this looks great for a big move to the upside, a correction coming back in here, and then another push to the upside. And part of this could also play into some risk-off trading. The euro has been getting some nods in 2020 for risk-off trading. The New Zealand's already weak. If we have additional risk-off trading, the New Zealand will stay weak. So if it balances, that's fine, but I'm looking for a higher low, and I think this Euro New Zealand does head higher. Okay, Euro dollar. This is probably on a lot of traders' radar, wondering, if the dollar is going to continue to get weaker. Here's what I'm looking at. If I'm looking at this euro dollar right now, here's my thoughts. We are overbought. We are divergent. We're coming back up to equal highs. If you were interested in selling, 119 is a great sell spot. Just above 120 is a stop point. Could we go from 119 with a stop area at 120 all the way back down to 114? Yes, that's a nice, clean, favorable reward to risk setup. I don't know if it's a guarantee. We might see the euro dollar continue to run and the dollar index continue to drop, and that is fine. If it doesn't work, it doesn't work. But if it does work, it's about a 4-to-1 risk or a reward to risk setup. So I do like that trade on the euro dollar. Again, looking at the technicals, we are overbought. We are divergent. Sell at equal highs, look at equal highs, look at even at selling at 1.20. Give yourself about a 50 to 100 pip stop loss above and see if those levels hold. Or you don't have to force any sell trades. You can just simply wait for, well, let's say we have this and a bearish candlestick. Stop area above a bearish candlestick and then go after that trade. If you want a bit more confirmation, you can also wait for a bit of a trend line break. And that way you're not getting into this too early. But I'd say if you're looking at taking a chance on this one, I like the levels to sell high, create a top here in August, balance back out a little bit towards 115 and 114, and see if the euro dollar cooperates in that regard. And let's see what the dollar index does as well. Pound Aussie. Pound Aussie, I'm looking for a chance for this thing to run higher, but not forcing any trades right now. Pound CAD is still dancing around between a lot of support resistance levels. I'd stay out of this one for now. If you are short on Pound CAD, that's great. We are currently short, looking to take it back towards 7,200, and that's working out just fine. Pound Swiss is not quite ready to hold the move yet. Euro Pound is sideways, Pound Swiss is sideways, but I'm looking for something like this. Can we hold these levels around 118 or 117.50? And from there, can we see this pound make a move to the upside? If we do, I'd love to see this trade work out where the Pound Swiss goes higher and the Euro Pound goes lower. You don't obviously have to trade both of them. You can pick one. If you want more pips are likely on the Pound Swiss than the Euro Pound. If you want a better payout and a slightly tighter technical move, then that'd be the Euro Pound. But directionally, I think both of them are favoring, if we come back to these lows once again, I'm still looking for these lows to hold and then for the bulls to come back in, get to 122, get to 125, and stay long in this one. If we come all the way back down here to these March lows, I'd still be really interested on the right side of this trend line to buy that Pound Swiss with a super small risk for a massive reward. Okay, but that trade will take time to set up. Pound Yen. Not particularly interested in the Pound Yen. I did identify this equal high and resistance area. Clean confirmation is required on the right side of the trend line. Pound Yen especially, don't fight it. Don't mess with it. If it breaks the trend line, we can look at deploying sell-only systems there. Look for nice, clean, bearish confirmation. If we get it, it'll run. It'll be a great trade. Pound dollar, still stalling at the highs around 3,100. Actually, I need to go Pound New Zealand. Pound New Zealand responded nicely. We've been long since 9,000. We took profit around 98.50 to 2,000. My suggestion to myself, my traders, was take profit. Great trade, cooperated for us, broke the trend lines, got back to 2,000. Awesome trade, protect it. We'll find another trade later. Pound dollar, you can see the resistance. If we get on the right-hand side of this trend line, similar to the euro dollar, if we hold the highs and we break the trend line, I do expect this to fall. Now, how far? I don't know. We can go from 130 back down to 126. That's not a hard level to come back to. Can we come and reset this entire move? Maybe. But as it oscillates up here, if we break lower, I'm watching for that. Again, we're overbought. We're showing some disagreement. Do we come back up and poke those highs and then start selling back off on the right side of the trend line? Looks pretty good. Okay, New Zealand CAD. New Zealand CAD, awesome trade, and is now in a profit zone for us. So if you are short on the New Zealand CAD with me, looking to grab some profit, we're currently 86.33. I said 8,600, 85.75, taking some profit. So this week we'll definitely be looking to lock in some profit on this New Zealand CAD and take it off the table. Great trade on that one. New Zealand Swiss, we are softer. Okay, just waiting to see what happens. It might take a little bit longer to give us some clear direction, but this might be coming back into support before we bounce one more time. This might just erode all of this move and retest these lows depending on that risk off environment. So I'm going to stand aside on the New Zealand Swiss for right now. New Zealand Yen, looking for a sideways breakout. We are getting it based on today's candle. I did have a system ready to rock and roll to the downside or upside depending on a 4-hour break. You can see that right now our daily break looks pretty promising to the downside. A 4-hour chart should also be to the downside. So if we're looking to sell this, that's good confirmation. Let's see if we can stay bearish. There's about 100 pips both ways. So if we break that yellow box low, we're going after about 100 pips of these lows around 68.20. So we're looking for about 100 pips to the downside. We could stay with that trade back to this breakout point around 66.70. So that gives us a run of around 280 pips. Not too shabby considering we're looking at about a 50 to 70 pip stop loss. New Zealand dollar, coming back into range conditions, but the dollar has been also softer, so I'm going to stay out of that one for right now. Dollar CAD continues to just slowly work its way back down. We're at 31.99 presently. Could we push a little bit lower towards 3,000? Yes. And all I keep looking to do is, if we are staying on the left side of this trend line, is stay bearish. So below 33.50, we've been bearish. As long as price stays on the left-hand side and stays bearish, we're trading this down towards 3,000. The bulls are going to have to step up around 3,000. If they do so here, we'll look for a bottom, break the trend line. We'll look at this trading back up towards 37 to 3,800. But I do think that 3,000 is going to be a nice level where we look for some major support. Dollar Swiss, very similar to the euro dollar, just in the opposite direction. So this is 9060. Are we going to head down a little bit lower? Possibly. There's another major level of support and resistance around 88.50. If you want to get a nice clean trade on dollar Swiss, wait for the trend line. Break the trend line, go lower, break the trend line, look for some bottoms, take it up. If you want to sell it, that's fine. You can stay with this. You can short the lows, tight stops, move it to break even. Keep looking for breakout levels, but into 88.50, take some profit. Okay, once we get on the right-hand side of the trend line, it should be a decent recovery to the upside. But we'll see what happens. I'm watching this one carefully. Again, August, looking for some tops and bottoms and some transitions out of those breakouts. So if you take the time to watch this video again, or go back through some of the charts I talked through in Forex, if you see a yellow box, if we break above or below, those are breakouts. Okay, if we're looking for highs and lows to form, I'm waiting for trend lines to break. It's not difficult, right? But this week right now, I'm setting up some really clean trades. Let's be patient. Once we have some good confirmation, we'll take some great trades. Okay, that's it, everybody. If you like the video, here's what I'd appreciate you do. Hit the like button on this video, subscribe to the channel, take these free videos, take these weekly outlooks, and take my Keep It Seriously Simple video series and send it. Send it to friends. Send it to anybody you think could benefit from this, free education, financial education. It's simply here to help, right? And I hope it does. I'm talking about things I'm doing in my live accounts. I'm talking about things I'm doing in my trading room. So it's a nice little sneak peek. If you want to follow me, get more involved, you absolutely can. I have a trading room called the Flex Trading Room. I'm also running signal services right now, so you can take the same trades right alongside me. If you're interested in that, send me a message. You can email me, or not email me. You can send me a message and just post a comment in my YouTube section, or you can send me a DM on Instagram. Just follow me first on Instagram, then you can send me those messages. But that's it. There's a lot of stuff that we're going to be trading here over the next 4.5 months. It's going to be a roller coaster ride. I'm looking forward to it. Right now is about being patient. Okay, don't force any trades. These trades will come to us, and then we have systems and strategies to deploy. If it looks great, we'll take it. If it doesn't look great, we'll wait. Pretty simple. Okay, all right, traders, let's have a great week. I'll see you in the markets, see you in the trading room. Take care, bye.